this episode, we're diving into one of the most dynamic and controversial corners of the crypto world, altcoins. What are they? Why do they matter? And could they have a place in your portfolio?
We recently broke down Bitcoin using our Fastfire investability scoring system. If you haven't seen that video, you can find it here. Today, we're expanding our view into the broader crypto universe, altcoins. That includes major coins like Ethereum, Solana, Chainlink, as well as newer tokens such as Avalanche, and even meme coins fueled by internet culture. There are thousands out there, each with its own vision and volatility.
Altcoins, short for alternative coins, are any cryptocurrencies that aren't Bitcoin. While Bitcoin was the first and most well-known, altcoins have emerged to offer different features, use cases, and innovations. Some aim to improve on Bitcoin's limitations. Others serve entirely different functions altogether.
Altcoins vary widely in purpose and potential. Take Ethereum, for example. It powers smart contracts and decentralized applications, forming the backbone of much of the Web3 ecosystem. Others, like Solana, focus on improving transaction speed and lowering fees. On the other end of the spectrum are meme coins, like Dogecoin or Pepe. These tokens often lack strong fundamentals or clear utility, and derive most of their value from internet hype, celebrity endorsements, or FOMO, the fear of missing out. Altcoins range from serious infrastructure building projects to speculative tokens with little to no intrinsic value.
Now let's score altcoins using our Fastfire investability score so you can see how they stack up to the stock market. If you're not familiar with our scoring system, be sure to watch the video here so you can see how we use the scoring system to evaluate alternative investments.
For return potential, we give altcoins a solid B. Leading projects like Ethereum have delivered remarkable gains, particularly during bull markets. However, the altcoin space is highly saturated, and most projects either fail to gain traction or eventually fade away. While a small number of altcoins have generated 10x to even 100x returns, it's important to recognize many others ultimately become worthless.
For risk profile, we assign altcoins an F because of their extreme volatility. Even top-tier altcoins can experience dramatic swings of 50 to 80% over short periods. Meme coins push this even further. They're highly speculative and often driven by hype rather than fundamentals. On top of the price swings, investors face risk from unstable platforms, uncertain regulatory environments, and the real possibility that some projects may be abandoned altogether.
For accessibility, we give altcoins a C. While popular altcoins like Ethereum are easy to purchase through mainstream platforms like Coinbase, many others require more complex steps, such as using decentralized exchanges, setting up non-custodial wallets, or navigating cross-chain bridges. For newcomers, this landscape can be intimidating and far from user-friendly. Let's walk through a simple example of how to buy an altcoin like Ethereum. First, you'll need to open an account with a reputable cryptocurrency exchange like Coinbase. The sign-up process involves creating a profile, verifying your identity, and linking your bank account or debit card. Once your account is set up and funded, you're ready to make your first crypto purchase.
Once your account is funded, simply search for Ethereum or its ticker symbol ETH and initiate the purchase. After a few clicks, you now own ETH. From here, you have several options. You can hold it as a long-term investment, stake it to earn passive income through blockchain validation, or use it in decentralized finance platforms to lend, borrow, or trade, all without relying on a traditional financial institution. It's a flexible asset with real utility in the crypto ecosystem.
While well-known altcoins are readily available on platforms like Coinbase, accessing smaller or micro-cap projects often require additional steps. These lesser-known tokens may only be available on decentralized exchanges, which means you'll first need to set up a digital wallet such as MetaMask. From there, you can connect to a platform like Uniswap to trade directly from your wallet. No centralized intermediary involved. This extra complexity can be a barrier for less experienced investors.
Altcoins are for investors who understand the tech or want exposure to next-gen blockchain projects, can stomach wild price swings, or have done their homework and aren't chasing hype.
Altcoins aren't a fit for investors seeking stable, predictable income. They come with high risk and a great deal of uncertainty. However, if you view them as a small, speculative portion of your overall portfolio, one with the potential for significant upside, they can play a valuable role in a diversified investment strategy.
Here's how altcoins stack up on the Fastfire investability scale. Return potential B, risk profile F, accessibility C. That covers our investability score for altcoins. If you want to learn more about alternative assets and how they score, be sure to download our free guide to alternative investments at fastfirecapital.com/guide. And remember to like this video and subscribe, and join us next time as we explore other alternative investments that the ultra wealthy use to build and protect their wealth. See you next time.